In today's nugget, we are talking about time rotations. Time rotations give the rhythm for the market across all time frames. Let's look at the example of the 8 hour. The 8 hour is at the heart of my trading system. The major rotations for the 8 hour that I use is 1 a.m., the London rotation, 9 a.m., the New York rotation, and then 5 p.m. the rotation into the close. Why is that important? Because the market always moves in phases across all time frames. We will look at that. So for example, we have here one phase, that's Asia and the gap time into London. That's the first phase of the day. Potentially we get an accumulation there. Then we get a rotation at 1 a.m. Eastern time. This rotation marks the rotation into the next phase, the London phase. Then London potentially traps the lows and then moves into an expansion phase, consolidating into the New York session. That's the next 8 hour. Then we get a 9 a.m. rotation, the most important one for the New York session. And then in New York, we potentially, with equity open, get another trap to the long side, and then it moves into distribution. So you see, this phases we get across all time frames. And the most important thing for us is to think about the pattern. That's the templates. In this case, that's the daily template. Session 1, Session 2, Session 3. What are they doing? Accumulation, expansion, trap, distribution. That's a pump and dump template. There's of course many variations. The most important thing for us is to think about this template and watch the major rotations. So these rotations are marked by my 8 hour levels. And these 8 hour levels, if we watch our multi-time frame bias according to the 8 hour bias, then we already track exactly these phases. So if we are in London in an 8 hour breakout, we know we are breaking out of the Asian range. And then if we come to the 8 hour to the New York phase, if we are in a fake out high, then we know they potentially trapped the high and are now in a distribution. That's the overall logic. Variations of the daily template and the 8 hour rotation. So of course there is many variations that appear on the market. The most important thing is that we think about these variations and watch the rotation pivots, as I call them, for the entry into the next rotation, and think about the pattern. Does it make sense? What could it be? How does it align with the higher time frames? So for example, a deadline template for New York. Asia potentially in an expansion phase. London, accumulation, going sideways, trapping volume above this 8 hour level, and then coming into the New York session, distribution. One pattern. If you follow the 8 hour bias, you find it. Asia breakout, London breakout, failing, fake out high, and then New York coming out of a fake out high, 8 hour breakdown, down to the low of the day. Pump and dump. Then potentially a zero pattern, as we discussed 2 videos ago. Fake out low, trapping the lows, trapping shorts. Breakout, pulling back in, trapping longs in the second phase. So 2 accumulation phases that trap traders. And then potentially New York coming out of the fake out high, low hanging fruit, distribution, parabolic to the downside. Or a low hanging fruit situation. Potentially Asia accumulation, then already London breaking down, distribution, coming into New York session, pullback, still in breakdown, continuation back to the low of the day. Accumulation, distribution, distribution. So critical is to keep that in mind, and especially to watch the rotation pivots. Examples. So here a nice pump and dump template on a day. Asian range, first 8 hour, You see the end of the rotation marks a pivot. So this is accumulation after a short trap. Then New York clearly goes into expansion, consolidates into the New York session. Here is the next pivot, marking the next phase. And then New York clearly goes into distribution. Here you see very nice how these phases are clearly distinct. Here a dump into the rotation, a pump into the next rotation, and a dump into the close. Another one, Asia, consolidating, accumulation, taking the high, or here trapping the high, trapping the high, trapping the low, consolidating into the next phase. The next phase, trapping longs, shift, distribution. New York, breaking down, trapping longs, shift, distribution. You see clearly these phases. We started with the day. So the day, of course, is marked by the 8-hour and the 3-session setup, the daily template. But let's move one time frame higher first. It all starts with the month. So for the month, we have 3 phases. So we always think in 3. So we have an opening range, initial balance, week 1 or 2. It's not always sharp. Week 3, week 4. So 1, 2, 3. Front side, back side, opening range, initial balance, trap, shift, dump, or parabolic, whatever. There's a couple of templates, of course. How do we use that? We think about the template. How do they build up liquidity and unload it? And especially we think about the new month rotation. That's a very important pivot in the market. So you will see very often the new month, especially thinking about the 5-star templates, give very strong moves. New month with new money and a new plan, and they typically pivot. So that's the major pivot, and from there we go into a next phase. So it will be either pushing into a continuation, so potentially distribution, or it will turn around and go into an expansion. So we don't know, but we know that around the new month rotation we can expect large moves. Let's look at it. So here an example of the gold chart. That's gold in May, June, July, August, and September. So huge coil and then a blow off. Let's go through the different phases and think about the monthly template and the major rotations. So here, that's the rotation from April into May. You see, they dumped it into the monthly rotation, then very strong move into May, new month, trapping the high. First week, fake out high. Then dumping down into second week, fake out low. Then consolidation into the end of the month. So that's a parabolic template coiling, but we know that's a range first and foremost. Then you see here very strong move into the new month, fake out high, fake out low, parabolic. So inside week, outside week, fake out high, dumping into end of the month. Then end of the month, strong move up, and then consolidating. Week 1, week 2, week 3, fake out high, fake out low. So parabolic at the end of the month. End of month, very parabolic strong move. Then first week pushing up, second week down, third week down, fourth week pushing up into the close. So you see again into the monthly rotation, and then here you see we get a continuation, very strong continuation, parabolic into the next month, unloading all of this coil. So you see really how this is always following the rhythm. So these major rotations either pivot or blow through. That's how you read that. Next one is the weekly time frame. The weekly time frame, we don't need to think about that too much because the pivots are synchronized with the week anyways. So Monday is the new pivot and we get a new impulse on Monday. But of course, with this impulse, we are careful because this is also opening range, initial balance, Monday, Tuesday, front side of the week, showing us the hand, what is happening. Then potentially what I'm looking at, what the pattern is, Tuesday, we typically go into range expansion. That's what I'm looking at. Then Wednesday, we often get a reset. So Wednesday, we either get a reset continuation or a trap shift reversal. And then on Thursday, the major 5-star day, we typically also get an expansion or a distribution. So front side, back side, and these major pivots. So it's more thinking about the template. Most importantly, for me, is the time rotation logic in the sessions. So there is especially the turf of these rotations, and there I dive very deep into it. And there we have a couple of these templates and rotations overlapping. So first you have the classic hour 1, hour 2, hour 3. That's the example of the New York session. Front side, back side. First hour sets up, opening range, initial balance. Second hour, we get the equity open. Third hour gives the trade. So 1, 2, 3, 3 phases. But then we need to go even deeper. We have the 8-hour rotation at 9 o'clock Eastern. That gives us the rotation into the third 8-hour candle of the day. Then we have equity open, bringing a lot of volume, and then we go into another template, opening box. That's a 30-minute rotation logic. So 30-minute opening box, 30-minute third hour first half, 30-minute third hour second half. So that's very important. That's a template in a template. In a template in a template, of course, across all time frames. So we have here the major things to look at is then the open box, and then the major 1-hour rotation at 10 o'clock Eastern. That's for me the major pivot to start looking for trades. And then from there we have the rhythm extending. So we have the next 30 minutes, then we have a 30-minute rotation, 10:30. And then we have another 1-hour rotation, end session, 11 o'clock. So these for me are the most important ones, and I will dive now deeply into this logic. So here you see the time. 8 o'clock Eastern, 9 o'clock, 10 o'clock, 11 o'clock. So that's first hour, second hour, third hour. That's the first thing to look at. So we have a first hour high and low that gives us the bias. Then we look at the template. What does the second hour do? What does the third hour do? That's the very first level that we're looking at. Then we dive deeper. As we discussed, we get the open box as another kind of opening range. So this is the opening range of the 12 candle window, and then we get an opening range of the second half of the 12 candle window. Opening range, and then we get first 30 minutes, second 30 minutes. That's for me the most important one. So what are the major pivots along these two templates? So for me, as also the 8-hour rotation here is very critical. We often see that there is a mover runner into the session from the New York pattern. Interestingly, that's just observation. This often pivots between 8:15 and 8:30. So if you are in a trade, I would recommend to cut the trade either 8 o'clock or latest 8:30, because this is typically the pivot, and then they pull back into the New York session. Then 9 o'clock, we get the 8-hour rotation. So I don't trade it anymore, but it's potentially a move from the 8-hour rotation into equity open. That's a scalp, a trap scalp into equity open, because 9 o'clock, as we discussed, 8-hour rotation very often pivots, and then they trap it into equity open. Equity open, a lot of volume coming into the market. Potentially, this is also already a pivot. So if you have a coil into the open, it often blows off. I don't trade that much, sometimes with US 30, because it gives very clean moves if it's a really nice template. But that's a real expert entry, of course. Then we have 9:45 potentially as a continuation, and then we have 10 o'clock as a 1-hour rotation. for me, marking the start of the real trading window. And then there you start thinking about these patterns. First hour, second hour, third hour. Do we have a rotation here, 10 o'clock, across this template? Then also we have open box. First 30 minutes, second 30 minute, third 30 minute. Does this make sense? And then interestingly, you also, of course, look at the 15-minute rotation, and even within the 15-minute rotation, the 5 minutes. So if you look for an entry at 10 o'clock, you also have to watch the 5-minute bars. So you have a first 5 minutes, second 5 minute, third 5 minute. So how I think about that is that for every 15-minute rotation, we have new traders coming in. So the 15-minute rotation traders at the 15-minute pivots, of course. 30-minute rotation traders at the 30-minute. 1 hour rotation traders at the 1 hour rotation. And they always have the possibility to turn the market and to print a pivot. So we always want to stay clear of the market before these rotations. That's very important. So we need a lot of space before the 1 hour rotation. We need a lot of space before the 30-minute rotation and some space before the 15-minute. So for me, this means 10 o'clock, potentially pivots. We observe the first 5-minute bar and then potentially take the second one. That's for me the very first sweet spot entry. This often is still a first mouse scalp because they potentially, with this second 30-minute candle, they potentially still trap. But then 10:15 to 10:20 is the first real session sweet spot for me. So if this pattern overall looks nice, this can give a very nice entry. Then the next one, after a pause, as we just discussed, 10:30 to 10:35, we typically wait if this candle traps, and then we take the continuation at 10:35. 10:45, I would be careful because you're approaching the 1 o'clock, the 1 hour rotation again. So this might trap and then shift again. So we typically wait until the first 5 minutes of the 1 hour rotation shows its hand. The second one we like to take. And then again, the 11:15, same logic. The first 15-minute bar of the hour is in. The first 5-minute bar, if this gives a continuation, this might be a nice entry. And even, I will show you this, even in this 5-minute bars here. So if I get a first 5-minute bar that breaks out, for example, then in the second 5-minute bar, there's again 3 phases. And I want to wait for it, what this bar does. Often it pulls back, leaves a wick, and then rolls over and goes into expansion. I wait for that. So I wait for the bar, what it does. If it pulls back, I don't enter yet. I wait until it reclaims, and then I enter in the second phase and potentially then go into the expansion. Let's look at the chart. So now showing you some random session template examples. Here you see that's the opening of the session, 1 hour rotation. We get a very strong move into the session. And as I said, if you are in a trade, consider cutting it early. Here you see 1 hour rotation, pushing up, trapping, and then 1 hour pulling back. That's the first hour high and low into the 8 hour rotation. This is the 8 hour rotation. This pulls further down. This is the potential trap trade into equity open. Equity open traps shorts pretty strongly with an impulsive move, then pulls back into the 1 hour rotation. 1 hour rotation breaks out. So now we get into the 30-minute template. First 30 minutes, second, third. So first 30 minutes, trapping shorts. Second 30 minutes, trapping longs. This 30-minute rotation, pushing back down, trapping shorts. And then this 1 hour rotation then shifts again here and then goes into a continuation. First hour, second hour, third hour, blow off. First 30 minutes, second 30 minutes, third 30 minutes, blow off. And you see how strong this time rotation pivots give a reaction in the market. So another example. So here you see first hour just coiling sideways. Then the next 30 minutes still coiling sideways. Equity open, expansion. Then working the high, distribution. And then 3 pushes low, reversal. So first hour consolidation or accumulation, second hour expansion, third hour distribution. If you look at the 30 minutes, it's a pump, consolidation, dump. So it's a expansion, accumulation, distribution. If you look at the timing, here you would break out. If you look for a short trade, there is no reason to go short here. Then you get the first wick up in an open box fake out high here, but that's 10.010, no entry. 10.15 gives already a fake out low. So you see here we have a micro pattern, fake out high, fake out low. Then you get a shift to the high, fake out high, switch candle. That's 10.25, no entry. That's 10.30. You see 10.30 doing a fake out low. And then our sweet spot entry, 10.35. As I said, does another fake out low. You see 1, 2, 3 fake outs into open box high. 10.35 shift. That would be the entry for short, if you look for short in this case. And then from there it follows through, and you see exactly the next half hour is distribution into the 1 hour rotation, and then it starts consolidating again, working the low, and then the next 1 hour rotation here turns around. So this is 1 hour then working down, the next hour turns it around and rotates back up again. You see how clearly this follows this rhythm of the market across this pivots. Low-hanging fruit setup. So you see 8 hour here, first hour of the session just consolidating, happens very often. Then we get the 1 hour rotation, still consolidating into the New York Open. New York Open traps shorts, pulling back in. Then the 1 hour rotation, another short trap. But then our entry candle, 10.05, just does a fake out low and pulls back in. So nothing to do. Then 15-minute rotation, traps longs, rotating back down. The 30-minute rotation pulls down. Then our entry candle, 10.35, does a wick up. That's the pattern in the 5-minute bar I'm always looking at. Wick up, and then it rotates down. That's our entry. There we have then first hour consolidation, second hour distribution, continuation trap, third hour distribution, fourth hour also distribution. So if we go in an open box breakdown, as you know, I'm looking for the open box 1x, that's down here. Here is the 10.35 entry. We have 30-minute 1, 30-minute 2, 30-minute 3 blow off. This is the 10.35 entry with a continuation trap wick on the 5-minute. We go in here, then it dumps cleanly into the 1 hour rotation. There we need to be a bit careful. It gives a reaction, but not that strong. Our 1x is down here, so we hold iron fist, and then it just goes all the way. And with the next 1 hour rotation here, this pivots, and this would be our take profit. And then from there, it goes into the next phase and pulls back. I think you should see it now, right? Takeaways. As we've seen, the market rotates in cycles within templates across all time frames. Month, week, day, session, 15-minute, 30-minute, 1 hour. All time frames have the same logic. You constantly try to understand the pattern of these rotations. Think about them. Accumulation, expansion, distribution, and especially watch the pivot points for the potential entry into the next phase. We wait for alignment across time frames and let the market show its hand at the major rotation pivot points. And this gives us our entry. 10:05, 10:15, 10:35, 11:05. That's my major entries in New York. If I get a nice pattern there, I take the trade. If it's not there, I pass. If you do this, then you will really be in sync with the market and you will feel it in your trades. If you're interested in my tools that track that across all time frame, Trend Predator Pro for the setups, Trend Predator Fake Out for the higher time frames and for the very low time frame, and Trend Predator Open Box for the session logic, then follow this link. There is free trials and free indicators available.